Hey everybody, another little quick short video addendum to video number one, which kind of focused on the upside, reviewing where we're at and what to do if we come in and reverse back up again on Monday. I forgot to go over the calendar in that, so I'll go over that very quickly here. Some interesting things coming up. Here's where we are at as of today, the 25th. Um, uh, Expect some further information about Brexit coming out. It already started coming out last week. It's officially got the votes. It's moving through, and they will be leaving the EU on Friday, the 31st. So really, I ought to move that down to here. But on Tuesday, Apple reports after the bell. Now, Thursday, Intel reported after the bell. We got futures going higher overnight, only to come in on Friday and open at our high of the day and have that massive sell all day long. So I wouldn't be surprised to see us move up higher on Monday, culminate on Tuesday, and then begin to sell again on Wednesday because of that same behavior that happened to us Thursday and Friday of last week leading into Intel. So Apple reports after the bell. On Wednesday, we have the Fed, the FOMC. We get our statement at 2 o'clock, and at 2:30, a press conference with Powell. And then after the bell on Wednesday, Facebook reports. Also, Monday, Tuesday, Wednesday of next week, those are the 3 days where securities traded will settle in the month of January, but anything traded on Thursday and Friday of next week will settle in February. So if there's any sort of discrepancy in behavior between what's been going on Monday, Tuesday, Wednesday, and what happens on Thursday, Friday, it could have something to do with that. On Thursday, after the bell, we get Amazon earnings, and then overnight, Thursday into Friday, we have China PMI coming out. This is going to be a key market mover in my opinion, and this is what I'm going to lead into the downside video talking about. They are probably going to be, taking a hit from whatever's left over in the dregs of what happened with the trade war. But as we go forward, the market is going to be standing on pins and needles waiting for this China PMI data, because anything going on with the coronavirus is going to put a hit on their GDP and on their economy. And people are going to be looking at their PMI numbers to see if there are signs that their economy is really going to crack and roll over based on this double hit of the trade war and then this coronavirus. Okay, so you got China PMI, their big state-sponsored PMI number coming out Thursday into Friday. So this is when China comes back to work after coming off of their long holiday. And then next weekend, we have the China Caxton PMI, which is the smaller non-state-owned businesses. This is an even bigger, more important number. This one will really show the weakness if it's there. And then Sunday night into Monday, or early hours of Monday morning, we'll have that whole deluge of PMI numbers coming out from Europe, all the countries around Europe and so forth, and then culminating in the U.S. PMI on next Monday morning. Then on Tuesday of next week, we have not next week, but the week after, the State of the Union address, and our factory orders number comes out. So I think that we could have some bullish behavior coming into the beginning of next week, maybe start seeing some squishiness between Wednesday, Thursday, as we get to the end of the week, and China comes back from their long holiday, and then we start getting this PMI stuff, and this could be where we really crack and work our way down lower. So anyway, that's the calendar. And one more thing, the VIX last week, we were handily underneath 15 on Thursday and Friday. On Friday overnight, the VIX dipped all the way down here, almost down to 1440, which is where we really need to see it break below to get bullish again. But then by the open, we were back above 15 again, and we shot all the way back above 16 and closed above 16 on Friday. So if we're going to come in and be bullish and hold that 32.95 level and work our way back up towards 33.30, and maybe get a little bit of churning between 33.30 and 32.95, and trade that wave back and forth, we need to see the VIX come down and maybe break below 1540. But if it can't break below 15 flat, that's where you're going to see things top out at 33.30 and work your way back down again. So if we can't see the VIX break below 15, we're going to top out on the S&P. And if we can't see the VIX really stay above 16 and, get above and stay above 16, that's where we will bottom out at around 32.95. So this is something that you can use to enhance your decision-making process and whether we're going to hold our low and top out at our high. Okay, hope this helped you and gave you a little bit extra information to go with video 1. Have a great rest of your weekend. As always, good luck and good trading.